All right, the implication of this decision is that it's going to reduce the rate at which the banks would lend, and of course interest rate will be high. I know that the central bank has consistently said that well, he's been able to achieve a single-digit inflation rate, and the exchange rate has been relatively stable, and there is no way you can have a stable exchange rate, a single-digit inflation rate, and as well have a low interest rate.
So that's the point. You want to eat your cake and you want to have it, except in the realm of dreams. In the real world, something has to give.
No, but if we're talking about job creation, fueling the economy, building infrastructure, having people be productive, people need to have access to fund,
yes,
to do their businesses,
yes,
to run the economy.
Yes, you need to have access to funds. And in the situation we are in now, the question is, where is the funds coming from? Is it going to come from cheap lending by the banks, or is it going to come from the development finance institutions? Is it going to come from structured intervention?
Now, if you're talking about cheap lending from the bank, how can you have cheap lending from the bank if the monetary policies are not supportive of that?
But that's the point. You are not going to have it now because, as you have said yourself, if you drop the 12% monetary policy rate, so say 10%, 9%.
This is the 14th time.
Yeah, because you want to provide cheap funding, which is highly desired by agriculture, by manufacturing, by infrastructure. As you said yourself, the other side of the equation changes very rapidly. Your stable exchange rate you have enjoyed for 3-4 years will react to it. So as a manufacturer, as an importer, you want to ask yourself, do I want interest rates to go down so I can borrow at 10% and have to buy dollar at 180 and 190? Is that what I want? So that is what the CBN is trying to manage. And as this CBN governor said, a drop in the exchange rate, a devaluation will have massive effects across the economy. Everybody from the poor to the rich will be affected once you drop the currency. But if you manage things like the cash reserve ratio, it's affecting just specific sectors of the economy. And you can continue to do that. You need to bring down the interest rate definitely at some point. The question is, when is the right point for you to start bringing the interest rate? The CBN consistently fails, and with these facts that show that the time has not come to do that. By the time the core inflation factors, for example, food prices, begin to really stabilize, by the time agriculture, as it continues to improve now, reaches a point where food prices really substantially are stable or going down, by the time non-oil exports begin to achieve a significant percentage, now they are under 20-25%. If we reach about 40-50% of non-oil exports, then you can begin to take the kind of decisions that can be justified to bring down the interest rates to achieve access of funds from the banking system at a much lower rate. But if you do that now, the same importer will shout and say, CBN has pushed the dollar rate to 190, and why? Just because of reducing interest rates.
Yeah. Now, can the CBN really achieve much without a complementary fiscal policy?
No. So that the point really is that quite often we are asking the CBN to do what it cannot do. The CBN cannot increase the exports of agricultural products. It cannot increase export earnings from tourism. It cannot increase exports from Nollywood, for example. And these are the things that will enable CBN do the things we want it to do. So that's why CBN is always talking about the fiscal policies that will drive production, that will drive export of non-oil products.
In other words, we've not got it right in that area.
We are trying to get it right. The Minister of Finance, for example, is always struggling to increase the budget for capital. But as she said yesterday or 2 days ago during the presentation, it's impossible for her to do it.
Because of the structure.
Yeah, the revenue, recurrent expenditure keeps going up. And so whether you have the money to provide infrastructure to promote tourism, for example, to get a lot of tourists coming in because there are beautiful facilities they will see, and you increase your earnings from that sector.
All right. In all of this, what should be the way forward? Now, let me put you on the hot seat. If you were the CBN governor, what would you have done the same? What would you have handled?
The point is that it is what you want to do. What is your mandate as a CBN governor? Stable exchange rates. So anything else you have to do to get that, you do it. And you just have to do what the governor is doing. Now, what you want to do is really outside the CBN, which is to say 14 billion was set for agriculture. A lot more, rather than 14 billion, we should be doing like maybe 50, 100 billion for agriculture.
Yeah.
We should put a lot more money in Nollywood, a lot more money in tourism, and build those sectors. So it's really not so much in the hand of the CBN.
All right, thank you very much. I'm sure we'll keep talking about it and, of course, informing the public so that they can actually understand and appreciate what exactly the central bank is trying to do and perhaps some of their challenges in trying to put things right. Thank you, Mr. Idahosa. Well, I've been speaking with Mr. Gabriel Idahosa. He is an economist and the CEO of UHY Maji and Co.